Hey, I'm Bob the Mortgage Coach Mitchell, and we're going over glossary terms again today. We're down to insurance, and insurance is a contract that provides compensation for specific losses in exchange for a periodic payment. Okay, so basically, what that means is you're paying for a certain amount of insurance at a predetermined premium amount. So you got to be careful with that, is that you want to make sure that you keep your house properly insured, because if something happens to it, you want to make sure that, let's say, for example, you bought the house 10 years ago for $300,000 and you just been renewing the policy over the last 10 years. You might still only have $300,000 worth of insurance on that property. So you need to make sure that you keep the proper amount of insurance in. Need to make sure that your deductible is in a range that you could afford it if something were to happen. If a hailstorm were to hit and you needed a new roof and your deductible was $1,500, well, if you don't have $1,500 to be able to pay that deductible, then you might want to consider going with an insurance policy that has a smaller deductible. Now, you're going to pay more in a premium because there's more of a risk to the insurance company, but there's more to it than just, get the minimum coverage for the cheapest price. It's a lot more that goes into it than that. I will actually cover this in a different video. So anyway, insurance is basically the insurance that protects you against a loss involving your property. It also has a liability component to it, to where if somebody slips and falls on your driveway or in your walkway, that you'd be covered from any liability that you might incur because of the house. Anyway, I'm Bob the Mortgage Coach Mitchell. Now let's put you into a house.